Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Super excited for this episode. Joining me is Joe. Please go ahead and give yourself an introduction.
Hi there. My name is Joe. I've lived in California my whole life. 25. I love to invest, long term. And as of right now, I work in the freight brokerage industry. A little breakdown of that is we don't own any trucks. We basically just broker out trucks that we find. We
Right.
tell them where to pick up and where to deliver. And it's basically just like the third party of the trucking industry.
Yep. 3PL, third party logistics. Yeah, I actually deal with freight brokers quite a bit myself, and actually I deal with asset-based companies as well in my day-to-day Monday to Friday life. So I'm familiar with that industry. I guess let's even just start in that industry. Is there any companies in that industry that you would invest in or do invest in? Transportation.
Yeah, there's like a lot of like my company's nationally recognized, which is great. I think we're top like 15th in the country, but
Wow.
we're private, so you have to work for a few years in order to be able to buy, stock in the company.
Right.
So I need to wait another year. There are a few other freight brokers, freight companies that, I would recommend investing, like Old Dominion, JB Hunt. Those are like the big names, for example. And then there's other ones that maybe don't have like the strongest fundamentals that I wouldn't recommend. But for the most part, the ones mentioned would be a great investment long term.
Right. Yeah, JB Hunt is huge. And I'll leave my opinion of Old Dominion to myself on that one. Let's just stick with transportation and jump over to the rails as well. I'm not sure if you're aware that in Canada we have two major rail companies, CN and CP, Canadian National and Canadian Pacific, and they extend beyond Canada. They have rail lines into the U.S. as well. And recently, CP just merged with Kansas City Southern, so they now have rail going all the way to Mexico as well. I believe it's the only rail company that has lines in all three big countries in North America. So, yeah, let's just shift focus to the rail lines and any American rail lines that because I'm guessing in freight brokering you probably use intermodal as well, correct?
Yeah, so mostly we find trucks like flatbeds,
Right.
like the 53-foot dry vans or reefers. I believe we do rail. I don't think uh it doesn't hold like that much of like a percentage in our
Yeah.
total volume. But for the most part it's mostly like moving like product in what's it
Yeah.
called, like vans across the country. So that's usually what we do, and it's actually like really fun because it's just like a constant idea that something could go wrong, especially when it's certain time of the year, the weather changes, or if there's emergencies on the road or traffic. So it's always one thing after another. You
Yeah.
can never assume truck's going to be there on time without something happening.
Yeah, I know exactly that because again, in my position too, we're obviously bringing a lot of things in from the U.S., so we're also then dealing with that cross border and customs and all of that paperwork. But yeah, and I know exactly what you mean too. In the winter, all of a sudden, like, oh, you have to get a truck across, say, the Midwest of the United States, and it's like, huh, Nebraska in winter probably isn't the best time to be driving or something like that, right? So
No, no,
yeah,
yeah.
I'm fully aware of all of those similar challenges. I guess then if you're not much into rail, probably not much into the overseas vessels as well. Companies like Mediterranean Shipping Company and the others like that. Do you have any knowledge of those
Um,
companies?
if I'm not mistaken, I believe like all we do is like domestic. So like,
Right,
dry vans, reefers, in the United States. We did branch out to Canada not too long ago. I believe like the Vancouver area.
right.
Looks like absolutely beautiful up there. But yeah, I
Oh,
believe
Vancouver's gorgeous. It's one of the most beautiful places on the planet.
yeah, it looks like a like one of those like top destinations you would see in a magazine.
Yeah.
But we just absorbed a freight broker, so that's pretty cool. That was, I think, in the span of like however many months ago. So I do think there's a lot of opportunity there. It's just more of like working out kinks of, I guess, a lot of freight brokers, when they're usually absorbed, there's usually like that transitional period where
Yeah.
I would only assume that, you have to get retrained to use like maybe our software, like our process and how like we want you to sell type of thing. But I wouldn't know like the specifics of that.
Yeah, no, very interesting because we talk about this quite a bit here. I'm more specifically with the rail lines because, like I mentioned, the two rail lines in Canada are massive, very wide moats. But both rail or OTR, over the road, uh, extremely important to the North American economy, right? I say it all the time, like without farmers and truckers, we'd all starve, and it's so true, right? Like you've got to move product from point A to point B. Basically, anything that you have in your house was on a truck at some point in time, right? Guaranteed, whether it was a bed or a desk or a lamp or a light bulb, anything that you bought at any store at some point in time was on a truck, right? So, um, one of the most important parts of the North American, and I'm sure the same in Europe and Asia and other parts of the world, one of the most important parts of the overall economy.
Oh yeah, that's a fact for sure. And I don't think I had like a true appreciation until I saw like, the strikes going on in Canada, not too long ago within like the last year. And you
Right.
realize like, wow, like truckers literally run this country. And if they went on strike for a day, like in the United States, like we'd be in big trouble.
Yeah.
So you could tell like whenever they're negotiating for something more, they usually come to a conclusion where it's good for them. But it's like you've probably heard of like that red car theory or the red car syndrome, whatever it's called, to where like when you hear about something or you start working like a certain atmosphere, all of a sudden you start to see those type of things every
Yeah.
day. And basically it's like, once I started in this trucking industry, every single like truck I'd be passing, I'm like, oh, what's their MC number? Or like, what's their that reefer, dry van, lift gate, that type of thing. And then I'd be driving on the freeway and sometimes I would like have my phone recording like on voice memo. And I'd be looking at these trucks. I'm like, I like the way this guy's driving, this and that. It's like very professional, and I'd be like just speaking MC numbers, and then I go and like write them down. And the next day when I get into work, I would like, look them up
Look them up.
online and like, oh, a lot of them maybe aren't set up with us as a carrier. Some of them might be set like, oh, they're actually like doing a decent amount of loads for one of our other offices, because we have like 40 offices nationwide. So it's
Wow.
just like, wow, what a small world.
Yeah, yeah. Interesting, very interesting background, very interesting industry, and very interesting sector of the economy. But let's jump into sort of more the investing side. You mentioned that you're only 25, so another one of the young guns, as I like to call all of you, younger generation, young adults. I've been doing very well at not calling people under 25 kids, although to many people my age, that's exactly what you are. Um, 25 though, you're definitely getting into adulthood, and I guess maybe just take us through sort of that investing journey, how it started, where it began, and bring us up to speed to where you are here in near the end of 2023.
Yeah, so I really got into investing. I want to say like seriously, like all in, back in 2020 when the market, I wouldn't say crashed, but sold off heavily.
The COVID crash of March 2020.
Yes, the COVID crash. And then that's where I saw a lot of hype. Like everyone started investing, taking opportunity. And I don't blame them. Like you have to strike when, the iron's hot. So
Yeah,
but prior to that, my parents got me investing when I was 16, and they created a brokerage account for me. Basically, because my dad, when he was like in his 30s, that's when he started investing. And he's like, I got started a little bit late because his
right.
father, was like, I need you to invest because when you have multiple income streams to the point where you don't have to rely on the state or the government, he's like, you're winning in life. You don't even have to rely on your job. And I'm like, well, that's financial independence.
Yep.
So he had me create a brokerage account at 16, and I was pretty much like lost. Didn't really know what I was looking at when you look at all the sheets, all the numbers. But he kept it very like conservative. He'd bring me to it was Chase Bank, and he'd sit me down with the money manager every quarter, and the money manager would break down basically like the P&L and then basically like what they're investing in, and I didn't know anything. I would just nod the whole time like, when can I go home, which is understandable. And then once COVID hit, I had a sizable amount that like I've been saving up that I said, you know what, I need to get this in the market because we'll probably never see a sell off like this. And if the market does rebound with the amount of money that's being injected into the economy within the next year or two, to get it back up to speed, then I think I'll be sitting in a very nice spot.
Right.
So basically, I didn't get caught up in like, that huge IPO investing, frenzy where we saw the same thing back in 2000. And obviously, I was only 2 years old then, but 2000 dot-com crash, a lot of companies IPOing tech stocks overvalued.
Yeah.
When they sold off, a lot of them went out of business or they lost, 90-95% of their valuation. But the ones that stuck it out, that had the great balance sheets, heavy cash piles, great leadership, and innovation fundamentals, that sort of thing. The ones that stuck it out, I said those are the ones that I want to invest in. Like the big techs and whatnot, and then others in certain other sectors that have held their weight and performed over time, like consumer defensive, real estate, consumer cyclical. So fast forward, now we're doing pretty well. Just investing whenever I can. One of the things I will say though is that it's very easy to get caught up in like investing. I don't want to say too much, but investing to the point where you might forget to have fun yourself
Yeah, you've
because
got
you're
to live life also.
exactly. You might forget, like, oh, hanging out with friends, going out there and enjoying yourself. Cause like right now, like I'm really trying to sacrifice in my 20s to enjoy, later on. But there's nothing to say that you can't. What I like to do with my buddy of mine is like what we call budget trips. And not to say like, we're financially broke, but like we'll go out and do something and we'll try to make it as financially, secure as we can just to see, how little we can spend, but have the most amount of fun. And it's also like probably the best thing ever
Yeah,
because
that's a great strategy, and you're building memories with a friend or a buddy or maybe a couple buddies or whatever, and those memories are worth their weight in gold. So, I'd say hats off to you for that idea. That's incredible. And I highly recommend that to other people as well. Like exactly like you mentioned, you still have to live life and you still have to have a bit of fun here and there and do things. And of course, that is going to cost money to say go to a concert or go to a say a pro football or baseball or hockey game or whatever. So, but those are memories, right? And I can guarantee you, someone from myself who's older, the memories that you create, you obviously you remember them, whereas things you bought over the course of 25, 30 years, you don't remember those nearly as much. Maybe you might remember a car or a truck that you had or something like that, but for the most part, you don't remember the purchases, but you have the memories of other experiences, right?
absolutely there's always like that sentimental value if you bought something you really care about. But it's mostly like the emotional attachment, when you create like a relationship or a friendship with someone,
Yeah.
like that lasts a lifetime. That will not be forgotten for the most part.
Yeah, exactly. So let's dive into, I guess, sort of what your portfolio maybe looks like now. I heard you mention some like, well, basically the tech sector, and I think you were mentioning like 20 some years ago the dot com bubble, and as you were talking about that, like the metrics of some of the ones that survived, and I'm thinking, well, Amazon is a prime example of that. Amazon was started in the late '90s and went through that tech bubble, and look at Amazon today, right?
Yeah, so where do I start? Hmm. So I'll be honest, I don't have any mutual funds. Funny enough, when COVID began, I actually went in my mutual fund account, what do you want to call it? And I liquidated everything. And it's funny, the following day, that money manager of mine that I've had for countless years, he like called me. He's like, "Hey, what's going on?" Because I forgot that they get what do you call like a commission or a fee.
Mhm.
And I was like, "Oh, I want to put this money in the market." He's like, "Oh," he's like, "I would," but he wasn't. He didn't come. He came out very professionally. He said, "I would, you know, just be very weary that right now the market is a very turbulent period." And I was like, "Okay, that's great. I'm gonna just
Yeah.
invest it all." And I remember in the span of I want to say like 3 to 5 months, I basically outperformed like the prior 5 years of what I had in that mutual fund in the span of like 3 to 5 months. I'm like, okay, this is much better. I can do this. But as of right now, I want to say I'm pretty tech heavy. So when the sell-offs are there, I'll be honest, it stings. But as someone who used to play, stock options, which is not something I recommend to anybody, it's created probably the highest of tolerance. Like I've seen six-figure sell-offs And now when I see sell-offs, it doesn't really bother me because I realize it's just a number at the end of the day.
Right.
What matters most is like basically like the journey, because if you're going up a hill, you trip over a rock, you have to expect that, before you get to the top. So as of right now, like I said before, I'm pretty tech heavy. I would say, like Apple, Nvidia, those are like my bigger investments. And then since we're going to like, election year, for example, I expect that things are going to be kind of turbulent, especially with, the rates going up and consumer debt. So I figured I'd be a little bit more defensive. So I have kind of weaned off a little bit from the techs. I still am investing in them, but I become a little bit more defensive. So I'm investing more in like Berkshire Hathaway. Merck is a big one for me. Spy, I don't think you can go wrong with Spy.
Hmm.
It's pretty lucrative. And it's such high volume, so you're always going to get your order filled for the most part, and
Right.
it's the most widely traded ETF. And I would say long term, though, that's probably my goal as of right now, to build majority of my portfolio with Spy, because prior to I want to say July of this year, I had like this fun little goal of mine where, I think it was like 27 grand in my portfolio. And I said, oh, how fast can I get to 100? And I started last December. And then by July, I hit that goal of mine. And then I said, I'll be honest, it felt like slightly empty because it felt like a little bit too easy.
Wow.
So I did like an account transfer, and I totally just like, sent it to another account. I started over like 1,000, because I feel like it just like at that point, it doesn't feel like much of a challenge. So that's why like now I'm starting again. And I started back in August, currently now. So August, September, October, almost 3 months.
Yeah.
And yeah, so it's very humbling, because now it's like, okay, the market's not performing like it did, in the last, year or so. So growth is going to be smaller or slower. And then do I want to keep investing in things that are a little bit more defensive, slower growth? Because we did get a little bit, comfortable with seeing tech stocks rebound 100+% this year. Now
Right.
they're kind of flattening out a little bit, hitting that resistance. So yeah.
I was gonna mention that, like you mentioned, sort of beginning in that 2020 uh, time frame of when you started to get more serious into it. Obviously, you had your teenager experience with your father and your investment advisor, but in that 2020 and 2021, everybody was doing great because the markets just kept going up and up and up, and even through several of the beginning months of 2022, um, things were all like nice and rosy and everything was like rainbows and unicorns. And then suddenly things started to come down and crash, and whether it was maybe not crash but market correction, and we've definitely seen a lot of that since you know the latter part of 2022 and most of 2023 now, where stocks are either still correcting or in a bit of a downward cycle, or just trading sideways, not really going up or down or anything. So I definitely get your point there of, you know, basically, making quite a bit of money through those 2 years, and then now, a little bit more of a struggle to try to make, to make that, oh, and congratulations, by the way, making 100 grand at your age is, that's impressive, right? To right off the hop to be there. They say your first 100 grand is your hardest, so it sounds like you've already accomplished that feat.
Yeah, it's been like I it's like honestly just a fun process, but it's more of like a learning lesson for me because when I used to trade options for the span of however long, which I haven't done it now for about I think close to like 2 years now. It's a lot of anxiety, and it's you're at
Right.
the mercy of the market, and I think a lot of people got caught into that trap when COVID first started, because a lot of people made it big and a lot of people lost like literally like life savings. I knew guys from college who lost like well into six figures, and I found out that was like their maybe their college fund,
Wow.
or it was like a brokerage account their parents had set up for them. And it's like you can only look at them and like they'll shake their head in disappointment. But I'm happy to say I ended off in the green. But that was just it wasn't for me, especially when it's your money.
Right.
So yeah, but the long term investment plan, I think a lot of people don't give enough credit to, because they are the winners long term. You hold
Yeah.
and you ride through all the bumps in the road. So, I mean, look at Warren Buffett, all the other richest people in the world, they've held through the darkest of times. And that's where that's why they stand so high.
Yeah, exactly. Exactly. So you've now, and again, very young age. So you have that time horizon of, let's say, 25 years until you turn 50. And so now you have, time on your side, the power of compounding. Um, yeah. And obviously, the dollar cost averaging, just you're going to keep working. You're going to keep putting, paying yourself first, putting whatever out of every paycheck, whether it's 10, 15, 20%. And yeah, you're setting yourself up for um, a very good future, needless to say, right?
Yes, absolutely.
So you mentioned that tech sounds like that's maybe the sector that you invest in the most. And again, at your age, it's probably a great sector to invest in because there is going to be more growth there, which is really hard for me to understand. Like Apple and Nvidia are, their market cap is absolutely unreal, and it's like, how are they going to get bigger? But on the other side of that, I'm like, well, how do they not keep getting bigger and bigger, right? So, um, do you have sort of a strategy between sort of growth stocks and maybe things like dividends and passive income? And obviously, I'm sure if you have dividends, you're again reinvesting your dividends and just watching that snowball compound as well.
Oh yes, absolutely. So yeah, all my dividends get reinvested. And that's actually a great point, because when you look at like the big techs, they make up, I think the top seven, the Magnificent Seven, they make up somewhere between 20 and 25% of the S&P, like the total weight, which is crazy to think about because there's
Right.
500 companies. And I think that's part of the reason why they're trying to break up those companies now and like kind of like diversify, because they're holding too much weight in the S&P. And I guess that's a good and a bad thing too, because they're basically monopolies, like, in their own sector, but no one wants to say it.
Yeah.
And they basically, dip their toes in like everywhere. So I'm sure you've seen those, those pictures online where it says like this company and like what other companies they own. And
Right.
it just keeps like, it's like a spider web everywhere.
Yeah.
But for the most part, I've seen usually like the techs, they don't offer like a strong dividend because they're growth stocks. So on the sideline, I would say I'd have to resort to like the ETFs, biopharmaceuticals I invest in on the side,
Hmm.
and that getting reinvested, it's slower. Like I had like a Merck dividend reinvested, and I think it was like half a share of Merck, but a year prior, I only had like a couple of dollars being reinvested in Merck. I'm like, wow, like a lot can change in the span of 1 year. How much can it
Yeah.
change in 20 to 30 years? Um, Another thing too I see on Twitter, which is always interesting and insightful to see, is a lot of people talking about like the dividend yields. I have buddies who invest in like the highest dividend yield stocks, but those companies might be down like 20 to 30%, 5 years to date. Whereas, like for example, like Home Depot, my parents are they love Home Depot.
Yeah.
I think it has like a 2% dividend, but its 5 year to date, growth is like 50 plus percent.
Yeah.
So it's like it doesn't have that, 6, 7, 8% dividend, but it has that growth to compensate, and it has a dividend. But a lot of people have also questioned me on Twitter, like, why do you invest in a lot of growth stocks? It doesn't seem that safe. And I'm like, well, I have the tolerance to, and I feel like we're all on our, own little separate journey.
Yeah.
I like that fast growth. It's very like, enticing for me. But one of the main reasons is because you can create a lot of wealth with these techs long term due to their history of stock splits. And I look at a lot of these companies like Amazon, Google, Tesla, Apple. They have strong history of stock splits, and every time they split, you're getting more volume per dollar that they go up.
Right.
And a part of the reason why I know that these techs are going to continue to perform so well is because since they make up a majority of the S&P, like the however many top tech companies in the S&P that makes up a majority of it, um, those stocks are in 401k funds, because you can't buy 401k, individual stocks. You have to buy like funds like S&P 500 funds or American funds, for example. Um, and being that you're going to have those funds in your 401k for like the next 30, 40 years, that means that you're going to have those top tech stocks. So those being held in your fund tells me that they're going to be held and they're going to be valuable over time. They're going to be
Right.
able to appreciate. Now, are they overvalued? Yes, I think so. But for the time being, I don't see them going anywhere.
Yeah, no, definitely not. Like, it seems like Tesla's just gonna keep getting bigger and bigger. Um, Nvidia is obviously like with what's needed for well, for Teslas and Apple's like the computer chips and Microsoft as well, right? So I can't see how they don't keep growing and growing. Apple, that market cap that, like I mentioned, just seems to keep going up and up and up. So, and you mentioned a very good point about you have the tolerance for it, but I was thinking you also have the time for it, right? Like you have time on your side, which is huge. Um, yeah, and I love what you said too about reinvesting your dividends, where even just after a year, it's starting to make a difference. And it's like I can only imagine what it's going to look like after decades, whether it's 20 or 30 years. So, um, again, you're setting yourself up for an incredible future for sure.
Yep. I would say like right now, the dividends like yearly isn't that much. I did the math like a week ago. I think it's somewhere like around 850 a year because I have a lot of tech stocks. But I guess that's respectable because
$850 for a year of dividends.
yes.
That's
Uh,
good though. Like that's $850 that you have to reinvest every year right now, right?
oh yeah, and it's great because with the tech stocks, since a lot of them don't have dividends or they have a very low percentage dividend, it's like it's humbling. But if I had like the same amount, maybe in like a high yield like ETF, for example, it'd probably be yielding like at least like 3 to 4. But the growth wouldn't be able to compete with the techs, especially with how they performed, this year and or the last 5 years. I'd rather take the growth because it shows that they're continuing to innovate, shows that their fundamentals are strong, and it shows that a lot of people have faith. And plus there's certain companies that I look at and I go, well, it's like it's kind of like a good and a bad thing that some companies have majority of like institutional ownership. Like for example, like Nvidia, it's like 70% plus institutional ownership. That's kind of a crazy number to think about, but for the
Right.
most part, that they're looking at that stock like their golden egg, like it's performed very well for them.
Hmm. Okay, since this is the Passive Income Podcast and we do discuss dividends here a lot, and um, I am curious, what is your highest paying dividend stock, or what is your biggest dividend that you get every, whether it's a monthly or quarterly, or what company pays you the most in a dividend?
I would say, funny enough, I think it's pretty sure it's Apple, and it's yeah, I think it only pays like less than a 1% dividend. But I have like a pretty hefty amount in Apple, so
Right.
um, actually, you know what? I'm gonna do some quick math. I'm trying to think here if
Yeah,
I
that's fine. I'll try to buy you some time here while you're punching some numbers, probably into your phone, right? Using the
yeah,
calculator on your Apple phone.
I memorize like a lot like the yields and like the prices, so usually just it's in my mind. So I get paid. Apple pays me about 400 a year in dividends.
Wow, that's like
Um,
almost half of your yearly dividend income.
Yeah, exactly. And then next in line would be Spy. I think it pays me like 200 a year. And then there's like Merck and then a few other stocks. Like even Nvidia, I was surprised. I didn't know it paid a dividend, but only pays like 4 cents. I don't
Yeah.
really look at that too much. But long term though, because I do like the dividends, how they're reinvested. Um, I would say, well, actually, short term, I'm shooting for $1,000, per year in dividends. I feel like you got to you got to walk before you can run.
Yep.
And then long term, I'd like to hit 10,000, which is going to be it's a far off goal because
You'll
you have
hit
to
it. You'll hit it in like I don't want to give you like an actual time horizon, but it'll come sooner than you think.
in due time. And I do realize like right now our market is kind of like starting to flatten out a little bit. So we're not really like so much I would consider like a bull market. And even my parents tell me like, well, right now this is a great time to invest because you're seeing a lot of turbulent action like we saw in '08 and 2000. So set the foundation now, and then when the
Right.
market turns around into a bull market, you'll really start to see what we're talking about with like your money working for yourself. Like right now, you're not really seeing yourself like You're
No, but
not
you're getting to accumulate. You're in the accumulation phase, and you're getting to accumulate everything at a bit of a discount,
exactly. Yep.
which is a great way to do it, right? Like, and that's kind of the really nice thing about dollar cost averaging and being able to dollar cost average down is that suddenly you're buying more shares at a lower price, and and then like you said, when the market turns around, and we know the markets will, they always do turn around, and suddenly you're on a bull run, and you're like, that saying of your future self will thank you because you've done it. You've started to lay the groundwork, the started to lay the bricks now, brick by brick, right?
Absolutely. I hear that a lot on the Twitter feed, brick by
Yeah.
brick.
Definitely, definitely, definitely for sure. That's very interesting, like very tech heavy, and then some index funds or ETF. I'm not sure which category SPY falls under, if it's considered an index fund or an ETF, but um, yeah, definitely. Now, I guess, is there any other sectors that you're curious about, or is it something maybe you want to start to think about in the future? Say 5 years down the road when you start going into your 30s. Um, what what other sectors maybe have you started to think about to maybe diversify that portfolio a little bit more?
Yeah, it's a great question. I would say maybe like the healthcare sector. I know they do pay a dividend. The only thing though, even though they've performed like, very well in the last couple years, they're very expensive of a stock. You're looking at like United Healthcare, Cigna Health, a few others. You're looking
The
somewhere between
Pfizers and the Johnson and Johnsons as well,
exactly. You're looking at like somewhere between maybe 200 to 500 a share, for like some of these healthcare stocks.
right?
So I'm thinking that some of these stocks are due for a stock split, like the next year or two. Eli Lilly one has performed well, and there's always a stock you look at, you watch for like maybe a year or two, and it goes up like 60+%. You're like, "Oh, I should have bought that one," but now you're
Yeah,
saying I do believe at the end of the day, you just need like a few good winners and you just need to let them, do their thing. And the best analogy I love to use is like a child. Like I don't have any children, but like I would only imagine when you have a child, they're going to make a lot of mistakes and they're just going on that bumpy road. And you have to just kind of like let them learn and let them be. And then once they grow up, then they start to give back to you. And that's what my parents are telling me. And I was like, oh, you're giving back now. This is great, type of thing. So it's
right.
kind of like that investment you held on has finally started to pay off, but you just had to, you had to give it faith. You had to give it time to work its, kinks out.
Hmm.
Um, but yeah, I would say maybe healthcare. And if I do change my mind on that, then I'd probably just stick with SPY because it's like very diversified.
Right,
When in doubt, just keep it simple.
right. So you feel like you have quite a bit of diversification just by owning SPY itself,
Yeah, I'm trying. I think SPY right now, like my total like net worth portfolio, it probably makes up probably like 8% of my portfolio, which isn't as much as I wanted to.
right?
I'd like to make it at least like maybe 20 to 25% by
Oh
the
wow,
end of the year.
that's pretty heavyweight.
Yeah, by end of the year. Because my ideology is like when I look to buy real estate, whenever that comes, it's definitely probably not going to be in California. It's just way too expensive. But it's insane to me to see mortgages now. You can buy like 40, 50-year mortgages. I never thought that would be a thing.
Right.
And now with the mortgage rates being so high, definitely not going to buy a house in California. But if I were to look out of state, which I have been prospecting a lot lately, I'm like, wow, you could definitely just put down like 50% on a home like in another state.
Yeah.
And the property tax is not as expensive. A lot of them don't have state tax. And then of course you can never escape federal tax. But for the most part, it's kind of weird to think about. And I realize like in California, you do have in certain areas, like you do have to either be, like maybe joint income or you're like just working an extremely, lucrative job that pays well to be doing well. But I feel like there's a lot of opportunity elsewhere, out of the
Right.
state.
Yeah, very interesting point. Here in Canada, we hear all the time about how expensive real estate is in Toronto and Vancouver. But just a few months ago, I kind of did an experiment on MLS, the multiple listing service website, where I just basically searched all of Canada for properties under $200,000, and it was amazing how many came up. And obviously, they're in very rural, remote areas of like Saskatchewan or New Brunswick or some place that you might not think about living. But yeah, there are opportunities out there to buy real estate at a lot less than what you hear about on the news of. And I'm sure that properties in California, like you said, I'm sure they have to be extremely expensive too. LA, I'm guessing, is probably one of the most expensive places to buy real estate in the US, would be my guess. New York and LA, I would think.
Yeah, it's fairly expensive in LA. I know like Orange County area, which is kind of like closer to like the beach. It's fairly expensive too. It's a very it's held its weight very well.
Right.
San Diego has actually lost a decent amount of volume in terms of like like equity in real estate, not equity, but like value in real estate. I guess because a lot of people moved there and then moved out. Like when COVID started slowing down. But we saw that with a lot of different cities like areas in Idaho, Austin, Texas was a big one. A lot of places that lost value in real estate. People moved in way too fast, pumped up the real estate value, and then they left and they realized, oh, it's getting a little bit too overcrowded. Um, but I mean, a lot of the houses like in my area too, I live like near Pasadena, like you won't find a house for the most part like under 900,000.
Yeah.
And these houses, like I look at these houses going up for sale, and a lot of them are like 2,000 square foot. And I'm like, wow, these houses are small. Like,
Yeah, they're just it's same with Toronto and Vancouver. They're yeah, probably you're around the same 900 grand, obviously in Canadian dollars, but and it's similar. They're just like average, normal, like bungalows or like you said, 1,500, 2,000 square feet. Nothing um, like you're not buying a mansion for 900 grand or $1 million these days in those areas, right?
oh, exactly. Like I have a buddy of mine who lives just like north of me, probably like 15 minutes, and he kind of like lives like near the mountains and really nice area. And I think his house at the beginning of COVID was like I think it was valued at like 2.3, 2.4 is like 6,000 square foot home. And
Wow.
his dad works in like I wouldn't say the same industry, but he works in like recycled packaging industry that uses that packaging as stuffing for like car seats for like luxury vehicles.
Right.
And I looked at their home value, I think it was like 6 months ago, and at one point it hit like 4 mil, and I was like, that's insane. And I showed that to his dad. I brought it up, and his dad's like, I'm just hoping my house doesn't get reassessed because he's like, I do not want to pay property taxes on that amount. So he's
Yeah.
like, we're just gonna lay low, just hope, cross our fingers. But I mean, of course, if the house gets inherited, which fingers crossed that doesn't happen for a very long time, um, then that would mean that you'd most likely get reassessed. But for the most part, I'm really surprised some areas didn't hold their value so well, while others just skyrocketed.
Yeah. Interesting. We suddenly got into real estate, which made me think about REITs, real estate investment trusts. And I know that one of the most popular topics on X/Twitter is realty income, ticker symbol O, and also very popular here on the Passive Income podcast with so many other American guests that have been on in the past. So I guess just your thoughts on REITs and in particular realty income.
I'll be honest, I have never really been one to invest in REITs. I've always been like the guy who watches on the sidelines. I won't say when I look at a graph that determines like if I buy it or not, but
Right.
I do think that realty income has good fundamentals. I just think that when tech does extremely well, real estate maybe in certain areas will hold their weight or their value, and while certain times maybe it doesn't. But looking at how realty income has performed in like the last 5 years, it's in the red. But I know it does pay a high dividend, I guess, to entice buyers. Like, hey, like high dividend yield, although our graph is selling off. But like I mentioned before, that wouldn't be the main reason why I wouldn't invest into a stock. I like to look a little bit further because I've had certain stocks which were down a couple years to date, and then all of a sudden they turned around because they started, implementing new processes or new innovations or new leadership, for example. So a stock graph doesn't really determine the company's performance. It's basically just like I guess
It's
like
a snapshot. It doesn't tell the whole picture, right?
exactly. And Jeff Bezos is a big, example of that. He's like, the graph is not, an example of what our company is doing. Like during the dot-com crash, Amazon lost like 95% of its stock price. And he's like, I wouldn't be worried because like we're doing fine. We have enough cash or this and that, blah, blah. And he was like, not worried. No, I knew he probably was, but you have to say that when you're on camera.
Yeah, for sure.
it rebounded, fairly well. Um, but the only like real, I guess, real estate stock that I own would be like Berkshire Hathaway Class B. I got into that probably about 4 or 5 months ago, I want to say, and it doesn't pay a dividend, but I do think that long term it's going to hold its weight fairly well and have
Right.
strong growth. And plus, it's one of the stocks I would invest in that's not 500,000 a share.
Yeah. Oh, great point. Great point. Right. Interesting. Yeah. Basically, everything I know about realty income is from what I've either read on Twitter/X or what other guests have told me here on the Passive Income podcast, which is it raises its dividend every quarter. It pays monthly and then raises its dividend every quarter by like a minuscule little tiny amount. But just the fact that you're getting those four raises per year also makes it enticing. And it's something like I don't even know how like 160 straight months or like I think since the 90s that or maybe yeah since so definitely solid in that regards of the longevity of the dividend payment. And yeah, I agree with you too that you look at a 5-year chart and you see red. Well, that does tell you something, but it doesn't tell you everything.
Exactly. Yep.
Awesome, and it also kind of made me think of VG Real Estate. That's the REIT that owns a lot of the properties on the Las Vegas Strip. That's another one that several of the past guests have talked about, and I just think that one's an interesting one too. That I personally want to look into it more. Just I guess just partially because of the fun of saying, "Hey, I own a little piece of the Bellagio or MGM Grand or Caesar's Palace or whatever," right?
Oh, exactly. Yeah, and I do think that as long as entertainment, which fuels Las Vegas, is there, I don't see Vici going out of business. As long as they maintain that real estate, that
Right.
property. So I would say long term, I can't see how it can't do well. But as of right now, I guess it's just at the mercy of the market
Yeah.
and a lot of other things selling off. Um, a lot of stocks or sectors that I thought would do fairly well in like the next couple years have just not really performed well, and they've gotten hit hard in like the last month or so. Like one has been solar. Like I remember I was watching Enphase when it was like a $2-3 a share, and then now it's like at one point hit 300 a share, and now it's back to like $100 a share.
Yeah.
So it's always like those few stocks that might perform extremely well, a span of a couple of years, then they sell off, and other ones that hold their weight fairly well. And a lot of people go, I had no idea that it could perform the way it did.
Yeah. Interesting. I'm going to jump into another sector, maybe two more sectors to cover, and then we're going to talk about some of your social media adventures as well. But I'm kind of curious in the sort of consumer staples/consumer discretionary. Uh, what are your thoughts on like the Costcos and the Walmarts of the world, the Targets? You mentioned Home Depot there. You can kind of lump that a little bit into that category. Obviously, consumer staples are more the groceries, like you have to eat every single day. And then the consumer discretionary, more like your Cokes and Pepsis and those, and basically every company I just mentioned there, right? Like extremely strong U.S. companies, dividend kings and aristocrats, um, and right. So I guess just what are your thoughts on sort of that whole
Um,
thing, that whole genre
I did
area?
forget, I did forget to mention too. I would say that long term Costco would be a great investment. Great little brick and mortar, and the partially, well, mainly because of like the culture of Costco. It's just very like well put together. The business model of it, the marketing is absolutely genius. I remember every single marketing class I had in college, they always use Costco as an example,
Right.
and it was always like some type of psychology, like I forget what the term was for it, but basically, when you walk into Costco, first thing I would always see when you see those big giant flat screen TVs, and they're like
Yep.
either $1,000 or they go up to like, 5, 10 grand. I'm like, God, that's really expensive for a TV. But the psychology is that the farther you move back into the store, everything starts to look more affordable because everything is such a lower price. So that's why you feel more inclined to buy more things in the back of the store. You don't feel as bad
Yeah.
because those
A jar
TV.
of pickles for $15 all of a sudden. Then it's a giant jar of pickles, and it's $15, but you're like, well, I didn't spend 5 grand on the TV at the front of the store.
Exactly. And I'm like, that's genius marketing. And they get you in. And I realized too, I'm a big food guy. I love eating food, and I would say one of the most genius tactics is their low prices of food, like when you can order it outside, like the pizzas or the hot dogs.
Yep.
Because us people, one thing that wins us over a lot of the time is food. I know a lot of people at work are always hangry, and the moment they get food, they're on your good side. So
Yep.
one of
I'm one of
the
those people at work. They know if I the clock strikes noon and I have to start putting food into my belly.
say, like, we have to refuel and recharge. But for the most part, I would say long-term Costco would be great. Their prices, I wouldn't say they are the absolute best prices because they do have to make a profit. But I remember I used to go to Walmart a lot, like in college, and they always had great prices on produce and like meat selections, which I didn't know like how do they make money because the prices were so affordable. So long term, I think Walmart could be a great choice as well, and it's performed fairly well over time because they're known for having like basically everything that you could think of for great prices, and it's just you find the most random stuff there. Now I think Costco, where it at, like I think a lot of these stocks are due for a stock split, but
Yep.
with Costco, I'm not actually sure because the higher that stock price is, it's less favorable by like individual investors, but to other like maybe institutional owners it goes like, well, it's like it's holding its weight fairly well.
Mhm.
But I don't know if Costco would split in the next year or so, or if they would say no, we're just going to ride this up to like maybe $700-800 a share, and then we might consider a 3 or 4 to 1 stock split. Costco would definitely do well over time. It's held its weight fairly well. uh, Walmart, it's taken a beating here and there, but I don't see it going anywhere, especially with how many locations they have.
Right.
Um, so yeah.
Okay, very interesting take there. And I agree with you too, right? The food and your stomach, I say this so many times, your stomach doesn't care if it's a bull market or a bear market or a recession or anything. Your stomach just says feed me every day, and it tells you that two, three, 4 times a day, right? So let's jump into your ventures online, and I've brought up your link tree here, and I will put this link in the description below. So you have your Devito podcast, and it looks like you have 2 YouTube channels.
Yes, I have one that I just talked about stocks. It's kind of like an experiment because I'm new to like, well, I wouldn't say I'm new to the the videos, but um it's kind of like a trial run, seeing how it goes with like the podcast on the bottom and then the video podcast. Those are the same exact podcast. One's on Spotify, one's on
Right.
YouTube. And I had a talk with a few people on Twitter, like what would you recommend? They said, well, on YouTube it's really hard to basically get podcasts out there in the algorithm
Yep.
unless you have a video like what we're doing right now. And a lot of times I just put a thumbnail over the video and I see like very little engagement. Whereas on Spotify, you go to Spotify to listen. So that's like
Yep.
the niche share, right? So I see more higher stats on the Spotify. And then for the investing, I'm still experimenting with that. It's kind of like, what do I want to talk about? So I just figured like right now, I don't like to clickbait people. I just because I don't like to be clickbaited.
Yeah.
But
That's wise too. Like the clickbait days really should be behind. Like you've got to put a thumbnail out there and then deliver on the thumbnail, right? And when people click
exactly,
on that thumbnail, they expect to get what
right,
they've clicked on.
exactly. I don't, I'm not the best at making thumbnails. I'll be honest on that, but I'm not a fan of like creating those super like fluorescent colored, thumbnails. Like, oh, is is this the end of like Vici if it sells off like $1, that type of thing.
Right.
But I do a lot of like portfolio reviews and more of like this is like my financial journey type of thing to where it's pretty much unique to myself because no one else can like really copy my own portfolio because it's my portfolio and it's my value, right? It's in the value is unique to mine because I invest however much I want to invest in it. I mean, anyone else could copy the same exact stocks, which is fine. But
But not investment advice, not financial advice, right?
exactly, yep.
So just
Um,
on the screen there, I have your DeVito podcast on Spotify. I will definitely have that individual link in the description as well. And I'm going to switch over to your YouTube channels as well. And so I'll have all the links in the description. So that is again, same like you said, the Devito podcast, but you can watch it on YouTube. And I actually did waited to do this because I just brought these up this morning. I see 6. I'm gonna turn that to a 7. So all you have to do if you're watching or if you know,
Thank
click,
you.
just go over there and hit that subscribe button. Um, Same thing on did the other one pop up? Yes, it did.
Oh,
So
thank you, Dave.
so there we go. At Joe DeVito at Joe.DeVito 159. Let's turn that to a 60. Just go over
Wow,
here and just hit that subscribe button right there. See
thank
how
you.
easy that was? It didn't take me any effort. It didn't cost me a dime. Just that easy, right? So yeah, let's get Joe some more subscribers on YouTube and definitely check him out on Spotify as well. Like I said, I'll put the link tree first in the description and then all of the others individually. And you can also check Joe out here, which is are we calling it X or are we calling it Twitter?
I still call it Twitter, to be honest.
Yeah, so many of us do. I, I've actually noticed. I'm not sure if you can see up here, but it still says twitter.com in the URL.
Oh, gotcha. Yep.
So you can follow Joe on X/Twitter at Joe underscore DeVito one, and definitely give Joe a follow there. Don't unfollow. Don't do that. Don't do that.
Yeah, I will say though, I've learned a lot just off of people like following people on Twitter, on how to format like YouTubes or podcasts.
Yeah,
And it's great because I watch a lot of like your podcast and like Tom and other people,
yeah.
and
Tom Savings Captain, great. He's been on here. I've been on his, and we have great interactions all the time.
it's great because it's very much like the reality of like how a podcast should run. I think what a lot of people do is they get discouraged when they listen to like a Joe Rogan or Andrew Huberman podcast because that's like top of the line, top of the pyramid.
Right.
It's like they have like the camera set up and like the high quality audio. It's like I like this. This
And
is
they have the
perfect.
production crew and the budget and all of
Exactly,
that,
and then
right?
exactly, and then you look at, like when you look at maybe, like, when I look at myself, I'm like, "Okay, I have, like, my microphone, I have my camera." It's very simple, I like that,
Yeah.
very cost friendly, but I think it's, the wrong idea to try to, like, compare myself to people like that because they just have the resources and the following, whereas, like, we're doing what we can do, in a
Yeah,
sense.
you got to build that following, right? Joe Rogan didn't start out with a million followers. Um,
Exactly.
and yeah, so oddly enough, speaking about Amazon earlier, I've been on Amazon recently looking at things that I could do to help improve, like sort of my setup, maybe a green screen and several other things. I think I had 4 different Amazon, pages open at once looking at, like, better quality webcams and, there was, like I said, 3, 4, maybe even 5 different, things I was looking at, but at the same time, it's like, well, trying not to spend all that money on Amazon all at once, right? So,
No,
um
that's true, yeah, I went through, I think 2, like, little microphones before I realized, like, I don't I don't know exactly, like, what I need because you buy it, you test it out, you realize it's not what I was looking for, and then it's usually, like, people I know, like, personally, like, in real life or people, like, I follow on Twitter, and I just watch, like, what they're doing and, like, what products they're using, and I'm like, "Wow," like, they've been using that product for a while. Like, my good friend of mine, he does a lot of, like, Discord, whatever you call that,
yeah,
and I saw his microphone, I'm like, "Oh, it's called Blue Yeti," and
so that's what you have, yeah.
I was like, "Oh, I've never seen that before," and I have this little microphone, and mine was kinda, like, scratchy, and he's like, "Oh, I've used this for a while," and it's not extremely expensive, but not, like, not pricey,
Yeah.
and I was like, "Okay," so I tested it out at his house, and I played it back, I'm like, "That's crystal clear," and I said, "Wow, I'm gonna buy that, I'm sold," and it's been my go-to now for, like, every podcast, so
Awesome, awesome. So, like I said, I will have all those links in the description below. So, be sure to give Joe a follow and a listen on Spotify, YouTube, and Twitter/X. Before we sign off, is there anything else that you'd like to say or shout out or mention?
I would just like to, I mean, shout out to you, Dave, for having me on here. I watched quite a few of your podcasts, and you're a very personable guy,
Awesome.
very
Thank you.
respectful, and I like that you're on your own, financial journey. I see that you do very well with dividends, so that's very inspiring for me to just keep investing. And it's honestly just it's just a part of the whole community. Everyone's
Yeah.
very supportive. I don't really see a whole lot of that support from people like I went to college with because they're not um, entirely in tune with like investing. But the moment I joined the Twitter community, which a lot of people don't know unless they're a part of it, it's very supportive,
Yeah.
lots to learn, and honestly, the engagement on Twitter is just like it's unreal.
You
So
are great at the engagement. Like so many of my tweets that you'll respond, even if it's just a word or two, just the fact that you're responding, right? That's incredible engagement. So you're extremely good at that for sure.
yeah, I've always been like a extremely like fast typer. I was joking with I forgot her name, Courtney, because I type like 70 words a minute. I'm like really fast. So
Holy
I go
cow.
through like basically like every single one, like every single person I follow, and like I hit every single one of their comments. And I read everything. So that's just the way I've always been. Because I believe like if you're posting something and like you're following someone, then like get after it, get after their content, say
Right.
something. Now I would say though, since I'm only following I think like 40 something people, I know there's people out there who follow like 1,000 people. That would take some time to go through every single person,
Yeah.
but that's a different conversation. But for the most part, I do have to thank you, Dave, for having me on the podcast. I really appreciate it. I'm actually stoked that we did this early in the morning because I'm a morning bird, and
Nice.
it's just got the rest of the day to be productive, get out there, and
Yeah, I
do.
definitely find when I have people from the West Coast on, this time works the best. A little later in the morning for me, but as long as it works out for people in California or British Columbia or wherever they may be on the West Coast. I do also want to thank you for your time and coming on and spending your time with me and sharing so much of your journey, even though you're just at really the beginning, the early stages of your journey. Um, so, again, hats off to you for everything that you've already done. Like I said, your engagement and replies on Twitter are amazing, and I can't appreciate or I appreciate your time so much this morning. So thank you again. If you're still watching and you've seen the ticker below, be sure to comment for a chance to win a Passive Income Posse coffee mug. That is the one that says "Turn that cash register around" on the opposite side of the coffee mug. And of course, if you're still here nearly an hour late, again, these are incredible, right? Like it's so hard to believe. You start the conversation, and then all of a sudden, an hour later has passed.
Yeah, I mean, it's I don't think it's by accident at all. I mean, when I talk to some people in life, it might be like I'm pulling teeth to get through maybe 30 seconds of conversation. And this is the first time we've actually, spoken face to face in a sense.
Yeah,
And I don't see it as an accident. I mean, it just shows that, we were connecting fairly well. So,
awesome. So, like I said, if you're still here nearly an hour later, please be sure to like this episode, comment below for a chance to win that coffee mug. And if you haven't already, please subscribe.
and I will subscribe to you when we finish.